Welcome to another episode of the Finance Magnates Blockchain Podcast. And today's guest is Ted Livingston, the CEO and founder of Kik. If you don't know, Kik is a messenger app with over 300 million users, mostly from North America. And it will be launching a token sale for the Kin cryptocurrency this summer. Thank you for joining us, Ted. Would you please tell us about the project?
Yeah, sure. Well, first of all, thanks for having me. I'm excited to be here. Really cool to find out that you're hosting this from Tel Aviv, where we have an office. So we announced a couple of months ago a new cryptocurrency we're going to launch called Kin. And basically what Kin is for us, it's a new way to monetize a consumer app, but also a new way to compete with these big companies that are increasingly monopolizing digital services.
I see. Well, I guess we all know who those are, at least in the West, right? That's Facebook and Google. And so why do you think that a cryptocurrency specifically will give you a heads up on them?
So I think it's two things. I think the first thing is these big companies have made it really hard for all the other consumer applications out there to monetize. So, these big companies are the only ones with the scale and the data to effectively monetize through advertising. And so then they go ahead and they make everything else free. So as Kik or any other consumer company, you're trying to compete with these big companies and make money. You can't do ads because you don't have the scale or the data, and you can't sell anything because consumers have this expectation that everything should be free. And so you just have no way to compete. With a cryptocurrency, what got us really excited about it back in 2011, believe it or not, is this idea that it could provide a third option. So now you could build a consumer community, and instead of showing them ads or instead of trying to sell them stuff, you could just bring people together, getting them providing value to each other through a cryptocurrency. And the more they did that, the more valuable the cryptocurrency would become. And so by setting some aside for yourself at the beginning, the more valuable your chunk would become. So first of all, it's a fundamentally new way to monetize the chat community, which we thought was really cool. But I think the second thing that gets us exciting is it's also a fundamentally new way to compete, a fundamentally new way to get a large group of people working together towards a common mission. And so for us, that's like building out this ecosystem of all these great places that consumers can go and have these rich digital experiences. And so we said, well, what if we took a big chunk of Kin and set it aside for all the developers who would help us build out that ecosystem through something we call the Kin rewards engine. Basically, almost like the mining fee, but instead of going to miners to pay out to run the infrastructure, going to developers to pay them out for helping us build this broader, open and decentralized ecosystem for consumers.
I see. Ed, can you give us an example of a few apps that you think can grow in this ecosystem?
Yeah, so the interesting thing about a cryptocurrency, sort of the counterintuitive thing, the new thing about it is it's no longer about showing ads. It's no longer about selling stuff. It's about bringing people together to provide value to each other through a cryptocurrency. So in Kik, for example, what that could look like is hosting a group chat. So we have a feature in Kik called public groups. And public groups are places that are based on interest where somebody creates it and hosts it, and then people join from all over the world and discuss around a topic. But to be a host, you're providing value to the community. You're hosting a great chat, you're moderating it, you're keeping the conversation interesting, you're providing real value. But today on Kik, you're doing that for free. You as a consumer are getting no compensation for that whatsoever. So now with something like Kin, we can give users the option to perhaps charge a cover fee to get into those groups. So if you're somebody who says, hey, listen, I host the best group chats on football, I only have 50 slots in my group chat, way more people want to get in than there actually is room in those group chats. So maybe if you want to get in front of the line, you can pay 1 Kin. And then on the flip side, I'm going to earn a bunch of Kin. I'm going to go on the other side, and then I might join a bunch of other group chats that I'm interested in. Maybe there's one on, baseball or whatever else I'm interested in. And so now as a developer, we're not trying to sell users stuff. we're trying to bring them together to provide value to each other through this cryptocurrency. So that could be group chats in Kik. That could be creating and consuming music on a music platform. That could be, hosting and joining clans in a game. Anywhere where consumers are coming together and providing value to these networks can be a great place where cryptocurrency can fit.
Yeah, actually, that's a very interesting idea. It reminds me of the criticism that mainly Facebook gets for basically monetizing user content without giving back anything. So
Totally. Yeah, we live in this world where we all work for these big companies for free. And then we wonder why they're worth $500 billion. It's, hey, if you could get the entire world to work for free for you too, it would probably be that valuable as well.
Yeah.
And we don't think that's right.
There's a great book on that called "Who Owns the Future." I forgot the author, but it's a really good book for anyone that's interesting with further information about that.
I've read that book as well, actually. It is. I can agree. It's a good book.
Mm-hmm. So regarding the token sale, how much do you plan to raise, if that's already planned?
So we're still locking down the exact amount, which we hope to announce shortly. I think for us, we're trying to figure out the right number that's not too greedy, gives us the right amount of runway to achieve this sort of ambitious vision. And so once we have that, we'll share that with the community.
Interesting. Okay, so we'll be looking forward to that. And other than that, I wanted to know regarding the what are the risks? Considering that recently the SEC in the US came out against, or not came out against ICOs, but it said that some tokens can be qualified as securities, right? Is there a chance that regulators are gonna impose impose some regulations on KIN?
I think the idea that tokens that are securities will get regulated like securities makes complete sense. You look at the DAO tokens, which is what the guidance was on, and the DAO tokens were basically a fund of funds that were pooling funds to invest in other projects, and then we're paying back out dividends to the people who held those tokens. That is like a classic security. like that is almost like the definition of a security. And so for the SEC to come out and say, hey, we looked at what the DAO did, and guys, this is like a fund of funds. It's obviously a security, and therefore should be regulated like a security. Makes complete sense to us, and is fully expected. I think like when you look at the utility token side, there's no guidance given on that, and so there are no rules in that space. It's an emerging space, and so we're working with the top lawyers all over the world to make sure not just that we follow the rules, obviously we do that, but also we're trying to anticipate where the rules will land and provide sort of the most thoughtful, buttoned up way to not only do a token distribution event, but also to build one of these decentralized networks.
Mm-hmm. That's interesting. We'll see how it develops. I'm seeing right now, different regulators are starting to ask questions, starting to see, what can be done.
What about you? What do you think the risks are? Like either in the space broadly or with KIN specifically? Like, would love to hear what you think.
Well, KIN actually it's supported by a strong product, so it has less of a problem regarding the investors, I would say. But most ICOs right now, they don't really offer a product or a system that it's built on. So, as far as I can see, a lot of them will not be successful at the end, just because most startups are not successful. And just if you give, randomly, you'd give 100 people, $1 million to start a company, one will succeed, right?
Right.
Yeah. So there's obviously that danger for the companies themselves, or should I say for teams, because you're an organized company, well established with access to top lawyers. But I think some of the new guys that are just setting up an ICO for a new project, and they don't know what they're getting into. Maybe in a few months they'll get a call from the SEC. I think that's a scary thought for a lot of people.
Yeah. It's funny. It's actually, this is sort of like a counterintuitive thing, but it's actually hard to spend a lot of money. And when I look at this space, like how much money is going to some of these projects that just have a few people. On one side, it's definitely like exciting. Like, wow, look at all this financial support to fund the development in this new space. And I think the blockchain space is going to revolutionize the world. So that's awesome. But also it is it creates problems in ways that, you wouldn't anticipate, which actually reduces the odds that some of these projects will succeed. If you have $100 million in the bank and you're five guys, all of a sudden, like one of your co-founders goes out and buys, a $100,000 computer. He's like, oh, well, I need this $100,000 computer. And then you say, well, if you're going to get a $100,000 computer, I'm going to get a $10,000 chair or whatever. And all of a sudden, it takes some time to put in place the right sort of processes and controls to be able to productively spend that amount of money. So it'll be interesting to see how some of these projects deal with that. And if there's anything ever we can do to help some of those projects think through that, always happy to help as well. I think the other really interesting thing you hit on is just on the consumer side. I think definitely some of these projects will not pan out as everybody hoped, and that there will be some disappointment at the end of the day for sure. And people will lose money at the end of the day for sure. How do you think about, because on regulation on one side, you're trying to protect the consumer, but on the other side, you're trying to allow and encourage innovation. How do you think those two things should be balanced in the space?
Well, me personally, I think that as long as the investors are, let's say, Bitcoin whales, right? If it's people that have a lot of holdings and they're diversifying their holdings, crypto holdings, they should be left alone, right? They know what they're doing. When it gets to more retail traders, I definitely think there's need to be at least self-regulation at this stage, because I can see in Israel, I can see that the regulators already are probably because of the Bancor ICO, they're already trying to focus on that, and it will be wise, if the ecosystem can prevent horror stories in the newspapers, coming out, in a month from now or 6 months from now, because after that, regulators can come down hard. So, hopefully they'll focus on investors with, a lot of crypto holdings, whether it's Bitcoin or Ethereum, and, not too much retail traders.
Right.
Mm-hmm.
Yeah, I think it's a good point.
Speaking about investors, I've seen that Kik has over the years raised over $100 million, right? So from traditional venture capital means. So how do you view the ICO process versus the traditional funding process?
Sorry, my calendar just came up here. I think it's really interesting. I think traditional fundraising process has been good for us. The great thing about building a consumer startup when it's next to impossible to make money is it keeps you very honest. Because every 18 months or so, you're running out of money and you need to raise more. And if you can't raise more, you go to business. And so that has been the history of Kik is sort of every 18 months, we need to convince somebody that, listen, this is our big vision. This is how we think we can make the world a better place and how we think we can make a lot of money as we do it. And therefore, you should give us a bigger and further investment. And so I think that's been good. It forces sort of urgency in the company. Hey guys, we really need to get this done, because once we get it done, then we'll have this great story, and with that story, we'll raise more money and effectively save the company as a consumer company that doesn't make revenue. So in a way, I think that's been really good. But I think the really interesting thing about crypto is it's just sort of fundamentally new and fundamentally more powerful. I think compared to VC investing, for example, I think one, you can get in basically at any stage and in any amount, and two, you can get out at any stage and in any amount. And I think that's really compelling. This idea that I can get in early, identify something that could be big. If I'm right, it can go up in value. I can sell maybe half of the crypto I hold and then let the rest keep going. On the other side, I think that's also the challenge of crypto fundraising, which is how do you sort of figure out which are the good ones and which are not? And then how do you keep these teams sort of honest and executing on the vision that they laid out? Because I think that's the hard thing now. There's a lot of projects right now. They're all raising lots of money. It's hard to know which are the good ones and which are not. And then once those projects get that money, it's hard to see, if when we were 5 people 8 years ago, somebody had given us $100 million, like that would have been runway forever. And there would have been no sense of urgency to figure out the next phase of the vision so that you could create the next version of the story, so you could go out and raise more money and keep the company alive. Now it's like, hey guys, we could spend $1 million a year for the next 100 years and we still wouldn't have run out of money. So I think that's going to be the challenge of crypto, is figuring out which ones are the good ones versus the bad ones, and then creating that sense of urgency and accountability behind the teams.
Yeah, the incentives right now are how to say, out of whack. I would say with with actually developing.
What do you think we do about that? Like, how does the space get through that? And this is honestly where I think regulators can play a role and be part of that conversation. Like at the end of the day, I think everybody wants the same things. Like they want these amazing projects to get funded, to happen, for there to be lots of innovation in the space, and to share in the economic upside of that. But at the same time, keep consumers and retail traders safe.
Yeah, I think there needs to be a move towards self-regulation, and if you're doing a project, raise the amount that you need. I would say that don't make it a unlimited an unlimited amount, so you can get to like fabulous. But of course, nobody has an interest to that. It would have to be enforced by the investors themselves. If people are going to limit what they're investing, to projects that that have a reasonable valuation, right? If you're selling 90% of your new coin at a rate of at a total sum of $300 million, I would say that's too much, and they have to think about what they're saying. But having said that, we can see certain messaging apps that do IPOs without I wouldn't say having any revenue, but without really providing a justification for their IPO valuation. As far as I can tell, is like a traditional investor, not a
Yeah.
But that's. Mm-hmm.
Yeah, I think that's exactly right. I think you hit the nail on the head. Is this is why sometimes there's this tendency in the space to say, hey, all regulation is bad and all regulators are bad. But I actually don't think that's the case. At the end of the day, if there's a way to break the rules, let's say like, let's use an extreme case and say there's a project out there and they have they're not planning at all to actually build out the project. They just want to take a bunch of money and then, pay themselves a ridiculous salary for a long time. And, they're going to raise $500 million to do that. Like, I think we could all agree, like, hey, like, okay, guys, you shouldn't do that. But if there is a way to do it and there are no consequences for doing it, then everybody's going to look at that and say, hey, they did it. Like, why shouldn't we do that as well? And quickly the whole space could spiral where, now it's really a race in marketing effectively to who can market the best project possible, raise the most money, and then disappear with that money. And so that's where regulation is important, is to say, hey guys, these are the rules of the game. We're going to set up the rules. We're going to enforce the rules. But other than that, like, innovate like crazy, bring this technology to market and make it the next big thing in the world. But you need both sides. You need like clearly established rules that are enforced, but then you also need a way to, inside of those rules, innovate as much as you can. And it's a very tricky balance, but a very necessary one.
Yeah. Right now, people that ask me about, the future of ICOs, they ask me like, how long will this last? I say, this is definitely the future. This isn't going anywhere, but maybe we need like a .com bubble that cleared out, the pets.com of the early internet. Okay, so people would say, okay, so I'm going to invest in a blockchain, a cryptocurrency, if it makes sense, not just because it has, the word ICO in the title, which right now most people, don't do. I mean, I've spoken to investors that tell me, because there's so many, there's no time to check. They don't read the white paper. They just diversify and hope for the best.
Yeah. So, when 90% of these ICOs are going up on the first day, there's no incentive to check. Just get into them all. But that won't last forever. And I think you're exactly correct. Like, this is here to stay. But this idea that everyone goes up, that's going to go away at some point. It has to.
Yeah. So another question I wanted to ask you. I can see where do you have time for another question, or you're going to run?
5 minutes.
Great. So I wanted to ask you about the importance of China for ICOs.
I think this is going to be the interesting part, is because blockchain as a technology is global, but regulation is local. And so what that means is, like, these blockchain projects, these ICOs, they want to go into every corner of the internet. But in those corners of the internet, there are local regulation rules. And, obviously China is a great example of that. They sort of have effectively their own internet at some level. And on one side, so the real interesting thing for us, like, I don't think we would obviously love to have people in China, developers in China involved in Kin and the project as much as possible, because we're trying to build a global decentralized ecosystem of digital services. But at the end of the day, if people from China were not involved, it'd sort of be like, that's too bad, but that's okay. I think the real challenge is going to be on the regulator side, and I think this is what they're looking at is, hey, blockchain is global, innovation is global, but our regulation is only local. And so on one side, if we don't regulate enough, consumers aren't going to be protected. But on the other side, if we regulate too much, then all the innovation will just move somewhere else, because there's going to be countries putting up their hands and saying, hey, we're going to be the best place in the world to do these ICOs, whether that's Switzerland or Singapore or anywhere else. And so I think that's going to be the challenge that China has to deal with, that the United States has to deal with, that Canada, where we're from, has to deal with, which is, what is that thin line of regulation where on one side we're protecting the consumer, but where on the other side we're not stifling innovation such that innovation just goes somewhere else and we miss out on this era of technology innovation. And that's definitely like a conversation like we're starting to have around the world with different regulators, and try to figure it out together.
And what about token investors? Because other ICOs, other projects told me they saw about 60% coming from China. So how do you view that, and what's your marketing accordingly?
So we are going to sort of reveal all the details around our token distribution event hopefully soon. It's one of these things where it's always like just one more thing to figure out, just one more thing to figure out. Because like as a big company and as an established company where there's been a lot of time and money invested, we just have to make sure we do everything perfectly. But I think at that time you'll see like we're going to take a little bit of a different approach to, on one side, do a capped sale that's not greedy, but on the other side, make it as fair as possible such that anybody who wants to participate can. And so we'll see how that goes. It is a bit of an experiment. We have done a pre-sale, so we feel we have enough capital to fund the project. And so really now it's about trying to get as many people as possible to come be part of this project with us. And hopefully a lot of those are in China, but just given where the global regulation is and regulation in each country, it may or may not happen.
I see. Okay, Ted, I want to thank you for a very interesting talk. And I want to thank our audience for joining us again. Please share this video, like it, and subscribe so you can keep following us for more blockchain and ICO news. Thank you, Ted.
Thanks for having me.